However, the biggest illusion of all is that fiat money has any value. It has no value until you convert it into a good or a service. But what the founders knew is that people marry the legal money of the state. I know when I was born back in 1954 that there were dollars, and the dollar didn't change in 1971. So they keep the name the same, but it loses purchasing power all along the way because that's the design of fiat money. So out of the original dollar's value, you've got officially 4 cents left. Unless you think, well, that's not so bad because, hey, it looks like it's trailing off. This is what the purchasing power has done officially over the last year. So even though that dollar is going up and they say, ooh, yay, strong dollar, this is what's happening to your purchasing power. So strong dollar is an illusion. This is your reality. And since it comes from the Federal Reserve, I don't know. Maybe it's a little bit better than the truth, but it's closer to the truth and to reality than most everything else that we see from them. So if you think about it, agreeing to work for and save those Federal Reserve notes / US dollars while knowing that inflation is going to erode the value of those dollars really does require blind confidence in the financial system. Blind confidence. And in my opinion, that is very misplaced confidence. And look at this. I mean, this should tell you that's misplaced confidence. So what we need to do is just take a little peek to the banking system beneath the skin of the markets. And what you see when you get there is that 10% of the population receive interest. So in other words, they're part of the banking system. 90% pay interest. I'm thinking those that receive it have a bit of an advantage. But let's look at banking consolidation, because back in the early 90s, we had 37 banks. Now, through the crisis, we have four main banks, and they hold 64% of all U.S. deposits. But make no mistake about this, regional banks, credit unions, they're all tied to these 4 large commercial banks. And the most current report from the Office of the Comptroller of the Currency about derivatives inside of the FDIC insured banking system shows that you're near 200 trillion in notional value. Remember, notional really doesn't mean anything. It's just a price that these guys agreed on, but it does not reflect the value at risk. Okay, so keep that in mind. You had a $20 bill 10 years ago, you've got a $20 bill today. Nominally, it's identical. They're both $20 bills. But what you could buy 10 years ago with that $20 and what you can buy today, vastly different. So same thing with this. Notional value of derivatives do not reflect value at risk, and it should be pretty clear that we are above where they were in 2008. But lest you think this little area in here where it shows a decline means that, oh, they settled out some of their derivatives. No. What they actually did was change the accounting rules and allowed what they call netting. So they look at both sides of this bet and decide that you don't have to account for both sides of the bet. So what that does is it makes the bets look smaller, when in reality, once they did all that netting, now look at this big spike at the end. They're going right back up. So they never actually went down, and according to the BIS and the IMF, it only looks like there are less, but in reality, there is more at risk and there's more notional value of derivatives than there were before. So let us not forget this, because quite honestly, what you have here, They have made these things so complicated that the bankers don't even know what's going on with them and how they're interconnected. And the government follows those bankers blindly, and most of the public follows them both blindly. But I'm not sure that that's going to serve you well. In my opinion, I don't think it will serve you well. So you need to also understand that conditions are in place for the next financial crisis, and the IMF is telling us that in order to make that transition, we need a big crisis, because perception management, they have to get us to go along with their illusion, their program. I know that I talk about the liquidity in the markets. You really need to understand that. That's why I talk about it all the time. Because this bottom graph shows you the conditions in 2008. This top graph shows you where we are right now. This is liquidity. That means buyers and sellers on both sides of the markets. Notice how the deviation happened over here, where liquidity was going down, but the markets were going up. Well, we see the same kind of behavior here. Markets are going up, liquidity is going down. You may think that you're smart enough to time these markets, but I know I'm not smart enough to time these markets, and I understand them. So what's really happened is over the last 8 years, the bankers have used this opportunity to transfer the risk from the private for-profit sector onto the public taxpayer balance sheet. So my question to you is, what have you done to protect your wealth from transferring away from you? Because if you choose to keep blinders on inside of these markets, I'm not trying to insult anybody, this is just a fact. Ignorance does not make you immune. It simply leaves you vulnerable. Let's take a look. Because what you're really counting on in these overvalued markets is the greater fool theory. Meaning that you're counting on somebody to come in behind you that's willing to pay a higher premium. Let's take a look at that. This is the market in 2008. As I said a little earlier, we're having a Trump rally. Markets are making new highs. But look at this. They're making new highs on declining volume. I know I talk about this all the time. This is an easy pattern to recognize. When a market rises on declining volume, that's an indication of manipulation. Because if we were in a free market, prices would rise or fall based upon demand, not demand going down and prices going up. I mean, just think about that logically. It does not make any sense whatsoever. And you can see this is actually a more exaggerated pattern, which is why they needed the Trump effect. But when the markets broke down here and here, what did they do? They did QE. They pushed a whole bunch of cash into the markets. But it's not working anymore. They had to come up with something else. Because as the prices have been going up, what you see is that the earnings from the companies are going down. So you're willing to pay more for declining earnings? Is that logical? Does it make sense to you? Think about these things logically, and it makes it a whole lot easier to see the illusion. Because according to price earnings ratio, and you can see that here, the prices of the stock are way above the norm, the average. So what you actually probably are going to end up with is something like what we're seeing here. Now, this was Black Monday in 1987, and I was there. Best day I could have been a stockbroker. But I'm telling you, I saw those markets in free fall, and there was no stock that was immune to that free fall. Difference was We were at a beginning cycle back in '87, and now we're at the end cycle. But counting on somebody to pay a higher premium when a market is severely overvalued, especially when they're illiquid. You may think you can guess it, but you're not getting out if a lot of other people want to get out at the same time. And we need to also understand the rest of what is at risk and why, until they're ready, if presuming they can keep control, why they need to keep the illusion going, because look at what's in the private retirement plan system. And we're not talking about pensions. We are not talking about unfunded liabilities like Social Security. We are just talking about the private retirement plans that have their money in the stock market and in the bond market. If you're in mutual funds, you've got stocks, bonds, or derivatives. So you're looking at somewhere north of 31 trillion in these private retirement plan systems, and lots of insurance companies and lots of pension companies that are counting on bond and market performance. Telling you, I knew back in the 70s Social Security was not going to be here for me when I was ready to take it, and it's by the skin of my teeth since I'm 62. But I think this particular graph is really, really interesting, and I'm going to point out why. First of all, you can see that only 15% of the population has any level of confidence in the banks and in the large corporations. But you can also, or not in the banks, in the stock market and the large corporations. They have 23% confidence in the banks, which is frankly pretty amazing to me, considering the fact of all of the manipulations and admitted felonies and etc. But okay. But look at this. You have what? 25% that have confidence in mutual funds. So you have 15% confidence in the stock market and 20. You know why? Because people don't understand what mutual funds are. Mutual funds are stocks or bonds and or derivatives. That's what they are. So are ETFs. So understand, if you don't have confidence in the stock market, you shouldn't have confidence in mutual funds. They're not liquid. Okay? So now we're going to look at the question as to why is the money illusion breaking down now. Now, of course, you've seen a lot of the loss of confidence in these different institutions. But it's also based upon the experience that we've had over the last 8 years. I mean, in 2008, and since then, I should say, the economy has been sinking like the Titanic. But the bankers on Wall Street skated away from that, not only unscathed, but much wealthier than they were prior to the crisis. And people see this, and that's much of why they are angry. What they don't understand is that as the fiat money has flown to these bankers, what have they gone and done? They've converted into tangibles. So they want equality, but yeah, the guys up there know they've already made most of that transfer. There's still some available. I'm not saying you can't buy gold or silver, but they know the truth. However, because of all of the headlines about all of these manipulations of every single market, interest rates, gold, silver, stocks, bonds, everything, that people are getting really, really angry because guess what? Nobody has gone to jail. They've just paid fines. So it's quite obvious that there is a huge double standard. If you or I mean, think about Wells Fargo for a minute. What did they really just do by opening up all of those accounts in their customers' names that the customers didn't request? That's identity theft. If you or I stole somebody's identity, I think we go to jail. And I can tell you, it would be very hard to find a job after you were convicted of identity theft. But here, they did it on a massive scale. And who paid the price? And this was game-changing. But it was mostly the low-level employees that either left because they couldn't meet or didn't want to or had a level of ethics that wouldn't allow them to perpetrate that crime. Or once that was discovered, they were the fall guy. So now the little guy knows that they're going to be the fall guy. And I don't know how many of you watched the Wells Fargo thing unfold, but hey, the guys at the top just made a lot of money from this behavior. And it was only with extreme pressure because of the backlash that the president of Wells Fargo stepped down and some other things were clawed back. But that doesn't change the fact of what they did. And consequently, because it has become so overt, these guys are so incredibly arrogant that people are losing confidence in the banking system. Because frankly, it's been made quite clear that not only are these banks too big to fail because of how interconnected they are, remember 4 of them, 64% of all the deposits, but they are too big to jail, too big to bail, and too big to fix. And this is why we have to go through reset. There is no fixing this problem. And they can't cover it up anymore. The illusion can no longer be sustained. You can see that by all the experimental policies since 2008. But that was just really about buying time. And what people know is what their own experience is. And they know that their cost of living has not gone down even with a strong dollar. Excuse me. Now this graph is really interesting, and I could do a whole thing on productivity, but you can see up until we went on a pure fiat system, the more productive you are, the more productive you were, your salary rose in tandem with it. Once we went on to a pure fiat system and you had private for-profit banks that were running the inflation control and running the money control, that's when we really started the division of income inequality, where the worker bees get less and the heads of the corporations get more. But at the same time that the worker bees are not keeping pace with it, thank you Obamacare, which we'll see, Trump says he's going to repeal it and replace it. Maybe it'll be better, maybe it'll be worse, time will tell. But the cost of insurance has gone through the roof. Not so with workers' income. The cost of medical care and education and food and energy also gone through the roof. The costs, especially since the crisis when so many lost their house, the cost of keeping a roof over your head gone through the roof. But what about the average salary? This is inflation, so you may be getting more dollars, but it never keeps in pace with the inflation of the cost of living. And in reality, you're behind the 8 ball, and people know this. And they are angry, and they are hungry, and they want change. We have over 43 million Americans in this country on food stamps. We better keep people fed, because when they can't feed their children, they can't feed themselves. We'll talk about that in just a second, because that's about the backlash. And when they are hungry and hopeless and angry, you have a revolution. So we started in 2011 with the Arab Spring. How did they quell that? Throw food at them. That's why we've got 43% or 43 million Americans over that of food stamps here. What about in Europe? This is confidence in the ECB. The ECB is the European Central Bank. Look at this. You've got another referendum coming up in Italy. Are they going to stay? Are they going to leave? But Great Britain left. The Brexit. That's all about confidence. So we are losing confidence in the central banks. We're going to come back to that too. And no matter where you are in this country, there you go. That's why we got Donald Trump. So what's actually happened is there's been a global inversion of influence. And where it used to be that people believed that the elites had more access to better information, at that their benefit was aligned with the masses, and you too could become an elite. Through everything that they've done, people are really waking up to the fact that that is really not true. And with the advent of the internet, if you dig enough, you can come up with the truth. So that whole influence has shifted, and it's more peer-to-peer, and they're angry, and there's mass movements. And this little gem, and I really want you to think about what this graph from Gallup is telling us, because they asked, and 49% of the American public believes that the government poses an immediate threat to individual freedoms. I really want you to let that sink in. 49% believe the government is a threat to your liberty. So the race is on. And the race is going to be based on whether we win or not on the 100th monkey effect, which is about the tipping point of when the masses collectively move forward as one. So you can kind of think of it like an avalanche. If you think about it, snow is falling, little teeny weeny snowflakes that weigh like nothing. And it builds and it builds and it builds. Do you know which snowflake is going to be one too many and create that avalanche? No. But it will happen. And if enough people lose confidence, and you saw that's happening pretty rapidly. I mean, 7% have confidence in the Congress? Really? This is the 100th monkey theory, and the effect anyway. So the question is, and this is really the race, and I know which side of the race I hope we're on, but will the public lose confidence before the reset, or will the central banks have the ability to remain in control after the reset? The reset is a given. It has to happen. The system is too broken down. It is no longer supportable by any side. It's way too expensive, and it just can't happen. So a reset will happen. You saw that they have everything in place between the SDR to take over as the world reserve currency, and there is a shift that's supposed to happen on January 1st. I'm going to do a little something about that coming up because it's important for you guys to know it. Okay, so will they remain control? Will they keep you confident enough in their abilities so that they affect the reset? You don't know where this hyperinflation is coming from, and they can remain in control. I hope not. I know that that's the side that I'm on. So now we're going to do a recap. And what I hope you saw today is that everybody that was born after 1913 has been born into the illusion, and that you really don't have a whole lot of choice. Even when you're thinking you're making a choice, it is probably influenced by one of the 6 major media companies. I also hope that you saw that people put value in those dollars, but they don't really have any value unless you believe them and are therefore willing to work for them and accept them as a tool of barter, and even to, dare I say it, save them. But that money that is held, any wealth that is held in the fiat markets, is intangible. You don't have hold of it, so it's really easy to manipulate it and also to confiscate it. That's a button push. That's all it is. They don't have to come to your door. They don't have to do anything else. And finally, that The current system is no longer sustainable, and we have to go to a reset. And if Wall Street and the central banks can maintain your confidence long enough through this reset and can maintain their credibility, then I won't be happy about it, but that's what they want. We have to wake up here, and we have to do our best to try and get as many people to wake up as possible so that we can go back to a more honest money system and, dare I say it, a constitutional government. That's my personal wish, and that is something that, with all of this, this is what I fight for every day. Because the public, as you saw in all those graphs, they're definitely starting to see through the illusion. So how does gold money perform during these transitions? There you go. I mean, that's the way it happens. In a reset, boom, it's overnight. You have no options. And here's Venezuela, who confiscated monetary gold in 2011. The real, or the Venezuelan bolivar, has more value as a napkin. So anybody that was forced to stay in it, they've lost everything. And 90% of the population is in abject poverty. But they did not confiscate the numismatic, the collectible coins. So, maybe that's what the 10% own, because certainly that's what the 1% are buying in this country. Just food for thought. And after 2011, when people had no choice, they couldn't buy gold, they rushed into the stock market trying to escape what was happening to the bolivar. But they couldn't really escape. This is what illiquid and loss of confidence looks like. You don't want to be the greatest fool. I would personally have rather gotten out here, anywhere but down here. And that's even assuming you have a choice. And I don't know if you can see this or not, but it didn't go to zero. It went to 14,000, down from 2.73 million. You've lost your wealth that was held in these markets. So you've lost any wealth that was held in fiat. Get that? Because you need to. Because here at ITM Trading, we have a strategy to protect your purchasing power, so to sustain your current standard of living, and to expand your wealth base. Take advantage of this. We can't get out of the way, but we can be in a position to benefit from it. And that's what the strategy is all about. And yes, indeed, its foundation is truth. Its foundation is good money, gold. Because gold prevents inflation. It runs no counterparty risk. And you hold it and own it outright, so it protects you. It is absolutely the ultimate hedge. Unless you think we don't see that kind of gold behavior in this country, that's how gold behaved when we transitioned, and that first transition in 33, and this is how it behaved during the 1971 transition. So we have already started to go through the transition as of October 1st from a debt-based dollar standard to an SDR air-based standard. What do you think gold is going to do then? I'm going to tell you, it's going to its fundamental value, which I can't give you the exact number because I don't know how much more debt we're going to grow before we do that reset. Nor do I know how much they're going to cover of all of the dollars that have been created. So you're looking at a minimum here. But I can tell you absolutely, gold is on sale. Central bankers are buying as much as they can get their hands on, and 1%ers are. You need to follow their lead because they understand the truth that they are perpetrating. So, that's it for today. I hope you found value in it. If I don't talk to you before Thanksgiving, have a great Thanksgiving. Enjoy your family and all the wonderful food. And we'll see you next time. Bye.